Let's now turn to lease modifications, which we've already hinted at in our discussion of lease remeasurements. Previously, when discussing remeasurements, we were focused on changes under the existing contract, such as whether we as the lessee are reasonably certain to exercise an existing lease option. In contrast, lease modifications involve changes to the contractual terms of the lease. For example, we might be leasing office space and amend the contract to include additional square footage, or we might negotiate a change in the payments. In these instances, the contract has been modified, and we'll need to account for that. So to begin, let's look at what ASC 842 says about modifications. Paragraph 842.10.25.8 states that an entity shall account for a modification to a contract as a separate contract, separate from the original contract, when both of the following conditions are present. 1. The modification grants the lessee an additional right of use not included in the original lease, for example, the right to use an additional asset. And 2. The lease payments increase commensurate with the standalone price for the additional right of use, adjusted for the circumstances of that particular contract. The paragraph continues with an example. It's kind of a long paragraph. For example, the standalone price for the lease of one floor of an office building in which the lessee already leases other floors in that building may be different from the standalone price of a similar floor in a different office building, because it was not necessary for a lessor to incur costs that it would have incurred for a new lessee. So essentially, we account for a modification as a separate lease if we have a new right of use that was not included in the original contract, and if the increase in lease payments roughly aligns with the standalone price of that additional right of use, within the context of the contract. Then in the next paragraph, 842.10.25.9, the standard states that if a lease is modified, and that modification is not accounted for as a separate contract in accordance with paragraph 842.10.25.8, the paragraph we just looked at, the entity shall reassess the classification of the lease as of the effective date of the modification. And the classification assessment as of the modification date will follow the exact steps we use when initially classifying a lease. Next, in paragraph 842.10.25.10, we see that an entity shall account for initial direct costs, lease incentives, and any other payments made to or by the entity in connection with a modification to a lease in the same manner as those items would be accounted for in connection with a new lease. So let's stop there for a second and take note of what we've learned. First, we account for a lease modification as a separate contract when we have a new right of use and the increase in consideration aligns with that additional right of use in the context of the contract. For example, imagine we're renting 2,000 square feet of office space for $5,000 per month. If we amend the contract to include an additional 2,000 square feet of similar office space for a total of 4,000 square feet, and our rent increases from $5,000 to $10,000 per month, we would clearly meet the requirements under ASC 842 to account for this as a new contract. We would apply the same 5 steps to account for the additional office space that we've used for all new leases. But now let's change the facts. Assume again that we're renting 2,000 square feet for $5,000. And we amend the contract to lease an additional 2,000 square feet of similar space, but our payment only increases from $5,000 to $6,000 per month. Presumably, the rent for the standalone additional office space is more than $1,000. I'm not sure why we were able to negotiate such a discount, but we did. Because the increase in rent is not commensurate with the standalone price of the additional right of use, we would not account for this as a separate contract under ASC 842. And as we learned in previous episodes, A modification that does not result in a separate contract is accounted for as a remeasurement. There is a bit more that ASC 842 has to say about modifications, so let's continue. Paragraph 842.10.25.11 states that a lessee shall reallocate the remaining consideration in the contract and remeasure the lease liability using a discount rate for the lease determined at the effective date of modification if a contract modification does any of the following. 1. It grants the lessee an additional right of use not included in the original contract, and that modification is not accounted for as a separate contract. That's exactly like our example where the rent for the new space only increased by $1,000. Then 2. The modification extends or reduces the term of the lease other than through the exercise of a contractual option to extend or terminate the lease. And 3. The modification fully or partially terminates an existing lease. And finally, if the modification changes the consideration in the contract only. Then paragraph 842.10.25.12 goes on to state that in the case of A, B, or D in paragraph 842.10.25.11, which are the cases of an additional right of use that is not accounted for as a separate contract, extending or reducing the lease term, and changes in consideration, the lessee shall recognize the amount of the remeasurement of the lease liability for the modified lease as an adjustment to the corresponding right of use asset. In essence, we treat all of these situations in precisely the same way we remeasured our vehicle lease. We adjust the liability and offset the adjustment against the right of use asset. Paragraph 842.10.25.13 then says that in the case of a full or partial termination, the lessee shall decrease the carrying amount of the right of use asset on a basis proportionate to the full or partial termination of the existing lease. Any difference between the reduction in the lease liability and the proportionate reduction in the right of use asset shall be recognized as a gain or a loss at the effective date of the modification. So I know that's a lot of text from the standard to walk through, but the takeaway is relatively simple. If we have a new right of use with a payment that aligns with that new right of use, we account for the modification as a separate contract and record an entirely new lease. If not, we account for it as a remeasurement. To this point, the only difference we've seen from the remeasurement process we learned earlier is in the case of a termination. In that case, instead of remeasuring the liability and adjusting the right of use asset for that amount, we remeasure the liability and adjust the right of use asset for the percentage decrease in the underlying asset after the partial termination. And we'll look at lease terminations, including a partial termination, as we move forward in the series. And at long last, that brings us to the final note about lease modifications under ASC 842. Paragraph 842.10.25.14 states that if a finance lease is modified and the modified lease is classified as an operating lease, any difference between the carrying amount of the right of use asset after recording the adjustment required by paragraph 842.10.25.12 or 13 and the carrying amount of the right of use asset that would result from applying the initial operating right of use asset measurement guidance in paragraph 842.20.35 to the modified lease shall be accounted for in the same manner as a rent, prepayment, or a lease incentive. Now that's a dense paragraph, but essentially what it's saying is that if we modify a lease and the classification changes from a finance lease to an operating lease, we need to remeasure the lease liability as we do with any other remeasurement and adjust the right of use asset for the same amount. Then we calculate the right of use asset as though this is the beginning of a new operating lease. Any difference between these two calculations is treated as a prepayment or a lease incentive, depending on whether the change is positive or negative when calculating the right-of-use asset balance. Now, I know that's probably still not completely clear, so in the next episode, we'll look at a real-world example of a lease modification, and it'll be a case where our classification changes from a finance lease to an operating lease. So we'll see exactly how we can apply this paragraph in practice.